10 a.m. right here in Lagos, Nigeria. Good to have you join us. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. First of all, let's take a look at what's happening in the market, starting with oil. We'll see oil prices gained about $1 in early trade today, lifted by supply concerns and a weaker U.S. dollar. So tension turns to what OPEC and allies, including Russia, agree at a meeting next week, marking the end of their 2020 output reduction pact. U.S. West Texas Intermediate crude for September delivery rose $1.09 to $97.51 a barrel, reversing losses from the previous session when sentiment was hit by fears of recession in the United States. Brent crude futures for September, due to expire on Friday, rose 86 cents to $108. The more active October contract climbed by 87 cents to $102.70. Brent is on course to climb nearly 5% for the week in its second straight weekly gain, while WTI is on track for a nearly 3% rise. That's for the week, recouping previous week's losses. Nigeria signed a memorandum of understanding with Niger and Algeria to build a 4,000-kilometer gas pipeline across the Sahara, which is estimated to cost $13 billion. The pipeline linking the three countries could have the capacity to supply about 30 billion cubic meters of gas to Europe, which seeks to diversify its gas supply in light of Russian action following the invasion of Ukraine. An earlier agreement had been signed in 2009 for the construction of the pipeline, but discussions stalled at that moment. Meanwhile, the Algeria's energy minister says the three countries will continue talks to undertake the project as soon as possible. And the Lagos Commodities and Futures Exchange has officially begun the real-time trading on gold for the first time in Nigeria, as well as 12 other major commodities. This comes after the LCFE received license from the Securities and Exchange Commission to operate at its trading floor in the country's commercial capital. At the commissioning of the exchange, the governor of Lagos State, Babajide Sanwo-Olu, and the managing director of LCFE, Akin Akeredolu, highlighted some of the significance that this development holds for the country's commodity ecosystem. Take a listen.
History is being made with the formal commissioning of the Lagos Commodities and Futures Exchange, which is now being regulated by the Securities Exchange Commission, which is a dedicated electronic trading of Nigerian agricultural products, of solid minerals, oil and gas, and globalizing this trade through partnership with other commodities exchange around the world. But this is not all. In addition, this morning, we'll also be witnessing, more importantly, the gold spot contract series, which is valued at about £100 million sterling. It's comprising gold-backed financial instruments that will be listed and traded on the Lagos Commodities and Futures Exchange. What this means is that these spot contracts can be redeemed at any time for specially made gold coins at designated vaults. We will also be witnessing the launch of the first tranche of a special gold coins for which spot contracts can be redeemed, like what Aki had said. These gold coins will be known as Eco Gold Coin.
I think we've got to a point whereby other countries in the world that produce crude oil, they have their own energy exchange. That is the next frontier that we're going to be moving into in the next 8 months. Because we wanted to settle clearly from beginning to the stakeholders in the gold space. And we have completed that to the extent that today you will see gold that's from Nigeria in bullion form. In bullion form today. And I'm very, very happy that the executive governor of Lagos, Mr. Governor, understands the implication of where gold is traded. If Lagos becomes a hub for gold trading in Nigeria, it means Lagos becomes a hub for gold trading in West Africa.
And now to our first conversation. Following reports of the excess crude account dropping about from $35.7 million to $376,000, the ECA savings account retained by the federal government is supposed to be a buffer for times of volatility in the oil market. Well, let's have this discussion now with Mr. Oji Demezwe, CEO of Flame Academy Consulting Limited. Join us right here in the studio. Great to have you.
Always my pleasure, Ladi. Thanks a lot for having me.
So this is the trending matter right now, talking about the excess crude account depletion. Some have said that it's now at the level that some footballers earn weekly. Quite a serious matter. What's the implication of this?
Well, it's the implication is very grave. It worsens the outlook on the country's ability to meet its foreign exchange obligations. That account is where we are meant to store whatever excess we get, from maybe we budget, to get some amount of dollars from our sale of crude, and then we're able to get much more than what we budget for, maybe because of a price advantage like we're having now during this Ukraine-Russia problem, when oil prices
So about $50 should be going in
we
there.
should be pumping money into the account right now to be a buffer in case the reverse trend happens when oil price goes well below our budget. So we make it up from there. So it's meant to be a kind of savings. All right? So if we are so pressed, so financially pressed, that we have to deplete the account to fund our budget, there is a very serious situation with dire consequences. Mind you, the external reserves itself has not been trending up as we would expect at this point. These are two different concepts. The excess crude account, where we save whatever we get from our excess sales, and then the external reserve that generally pictures the balance of trade in the economy. How much we have in excess or in deficit in our international trade transactions. Foreign receipts, less foreign expenditure on import and all of that of goods and services. And external reserves is also a show of strength of a country's ability to meet its short to long-term obligations. How much of import can you do, with your external reserve, assuming you have no means of earning foreign exchange at this point in time? If Nigeria goes into war, a situation where we can't earn dollar, how many months of import can that external reserve cover? It's still very, very low at this point. And to worsen it, where we should be, getting some buffer, through the excess crude account, we also depleted. And over the years, you see the central bank, trying to continuously defend the naira that has remained undefended. A defense that has never worked over the past 6, 7, or even more years. And we still keep doing the same thing over and over and over, expecting things to change. We have been defending the naira since 180 to 200. I remember even in this studio when we had an argument that central banks should better collapse the gap between the parallel market rate and their own defensive rate.
Right.
Then the futures market was then, I remember, estimating that the real value of naira was 250 naira to $1. Nigeria was still claiming about 180. And I hear in this studio, I advise that we should better collapse it to ensure that every uncertainty and speculation surrounding naira would end. People said, "Oh, you are a bad economic advisor. You are a bad, how do I put it?
Yes.
You don't love this economy. How do you want inflation to just, hit over us?" Now review. Even as this Polongo dance continued, we kept advising, end this party going on. That party is working against this country. And the party has continued over the past more than 7 years. And here we are. If anybody had, suggested to the government, collapse the difference between the parallel market and official rate to, let's say, 250, then the person will appear to be a very crazy person, the hater of this economy. Today, where are we today? The same dollar is selling at over 700
naira. But there's also
and we have continuously depleted our hard-earned foreign exchange in selling this, scarcely earned foreign exchange, to some people who have access to central bank or who can come with the name of the presidency to collect this excess, this scarce resource at 416 or thereabouts, and immediately have the opportunity of selling it at 700. If you were that person, wouldn't you do the same thing?
Well, yeah, it's quite a profitable venture, I must say, and because it's been allowed to actually...
It's the most inefficient way to allocate, our US dollars.
But looking at this depletion now, what's the, modalities to actually withdraw from this account? Like, what's the process? You just going there and just take the money? Federal government just has access to it?
Nigeria is a country that has not been very well rated when it comes to fiscal responsibility. All right? If, these accounts have, modalities for approvals, through the parliament and presidential assent and all of that. But in this country, we have a situation where the president is everything. And unfortunately, I'm sorry to say, we also have a National Assembly that's just a rubber stamp. They have lost their power to check and to balance, governance in this country. And we're just on a railroad, one-way traffic. The Senate is run by a crony of the president. The House of Rep is also run by a crony. And you find where the checks and balances desired in a proper democracy does not happen. So the president and his cohorts can wake up and send a proposal, maybe just cosmetics, and get things running, on their own account.
So these things were actually approved.
Well,
these
of course,
withdrawals.
They are approved, but what are the checks? What are the questions asked? How did we ensure that these withdrawals were meant for the long-term benefit of this country?
And it's for times of oil when there's volatility, in the oil market. And well, we've seen some volatility, in that market, but it's more to the upside.
Yes.
So why are we taking from there?
That's the point I'm making. This is a point reasonable people should be asking a question: why are we taking away from that account instead of depositing into that account? So it tells you there's so much more that's happening to our economy that the eyes cannot see right now. The country is so broke that we're looking for anywhere because let's also say it here that Nigeria is currently finding it very difficult now to access loan, both from bilateral lenders, multilateral lenders, and even commercial lenders. Because Nigeria is becoming more and more of a high-risk borrower, a high-risk debtor. And creditors around the world are getting it, finding it more difficult to lend to us. Why is that? Because we have shown, over the years, we have made the argument, every time Honorable Minister of Finance will tell us, Nigeria's borrowing level is still very healthy, that we have maintained a relatively lower debt to GDP ratio. And in this studio too, we acknowledge that Nigeria has one of the lowest debt to GDP ratio, within Africa, even around the world.
But the
problem is, what is the capacity of our revenue to sustain our debt service? We raised that issue then when the debt service to revenue ratio was still below 70%. Now we all know what the situation is. It's now above 100%, meaning that technically, if Nigeria is a business, the business is now illiquid, totally illiquid, and also approaching insolvency.
But the issue of not meeting our output quota, that issue is still there. So where we're selling,
these are risks.
Way less than that, and they're also withdrawing for security matters too.
Yeah, Ladi, one thing with this country is that we don't run Nigeria as a business to be a profitable business. So we always keep making excuses. Every business that must survive, that must run a sustainable enterprise over time, must look at every risk, must understand the topology and the whole array of risks that they face in course of their operations. That's why we talk about enterprise risk management. What are the various factors that might make you not achieve your intended objective as an entity, as a nation, as a business? And if we're able to sit down, and we have very strong, well-learned professors, business leaders, economists in this country who can do this. But how are we led as a country? How do our leaders harness all the human resources that we have to enable us to run this country as a profitable venture? Every business must always recognize the factors, internal and external factors that will always impact the activities positively or negatively. What are the factors that may make us achieve our objectives faster than we plan to, or make us stay away, have a very huge variance from our intended objective? That's risk management. And if Nigeria understood, before now, that single dependence or total dependence on oil is a major risk factor for this economy, we will not continue to believe that, we'll continue to borrow, that we'll always pay our debt, debt to GDP ratio is low. We have not looked at our revenue generating capacity. And the fact that this country has, over the years, continued to neglect non-oil revenue sources in this country. And we have failed to structure our internal entities, systems, agencies, and so on that collect revenue for this country. We have failed to manage even the revenue that we collect today. Do we actually see the whole picture? Whether from immigration or from customs and all of those bodies,
yes.
What's the journey between the point of collection to the government coffers?
Are
these systems run efficiently?
Yeah.
Do we have the right people at the right places, and all of that in managing our revenue? Let me assure you that this country earns enough revenue to run our budget. But accountability and corruption is a major issue in the system that we run today.
And yeah, but we're here now. The account, is depleted to below $400,000. What can we do to get that account back up and running?
Well, talking about what we can do is, one, the president and the commander-in-chief of the Federal Republic should please take some urgent steps to address the insurgency, the militancy in the Niger Delta region. Nigeria still has the capacity to, produce enough oil and even be able to meet our OPEC quota. Good enough with Russia's, decision or Russia's ban or sanctions that make them not supply their oil. Nigeria has a great opportunity to supply more oil to the world right now. But we have to deal with the issues. The same way we're battling with Boko Haram, terrorists in the north. Let's find a way to, deal with the leaders, call the leaders, in these oil-producing areas to see how we can minimize the stealing, the siphoning, the diversion, and the bumping into the crude oil to resolve that issue. How do we assuage the feelings and the challenges that we face in that region to boost our productivity? Nigeria is facing a very major issue in oil production at this point in time. That has to be dealt with strategically in a way that will give rise to a win-win situation, because those people have their own arguments why we cannot be using their oil to develop Nigeria, and they're living in poverty. How do we deal with their militancy and protect our oil pipelines and so on, and and also encourage greater productivity in the IOCs, international oil corporations? They're also not happy the way things are running. How far are we gone with the oil sector revival and all of that? That's a major issue.
Right.
Now, if you address that, then we are very likely going to ramp up our foreign exchange inflow. Number two is, how serious, or when can we ever get serious with the ramping up of non-oil revenue sources? Nigeria has the potential to export solid minerals in this country. But you and I know how these are being explored without accounts being given to the nation in some parts of the northern part of this country. Nigeria has a ability to export a lot of agricultural products beyond cocoa, vegetables, fruits, and so many things that if we pay attention to them, we train people and promote them.
We've been seeing some accretion with non-oil exports.
More than ever that we can grow export, because our currency is weaker and weaker. Japan, looking at Abenomics, may God bless his soul, just died a few weeks ago, refused to allow their currency, the yen, to strengthen against the dollar.
Exactly.
In the push to grow export. Now, we have not had to deliberately hold our currency to the value.
Right.
It's happening on us.
And talking about the currency, at this point, we're seeing global currency struggle at this. We're seeing the euro at parity, with the US dollar. Can we blame that on what we're seeing happening with the naira right now?
Well, naira's own case is totally different. Well, the whole impact, the whole global economic crisis is affecting every country. Even the US is not finding it very funny, because even as their dollar trenches against some currencies, it's not working well for them. It's going to affect their exports, negatively. All right? So it's not going well for everybody. But what is different about Nigeria's case is that even in the midst of the challenge, we are still frittering away our scarce-earned dollars. That's a problem. Today, people still buy dollar at 416, supposedly. Even though there's evidence, I have enough evidence to show that many genuine business people who are doing well-approved, valid for export or valid for, FX transaction businesses who have lined up over the past 3 years. I have a client I'm dealing with in my consultancy business who has about 3 years of backlog of FX demand, genuine demand, approved demand, valid for FX demand. They have not been able to meet in the past 3 years.
Every demand suffers
as these demands, continue to backlog, the level of uncertainty and speculation continues to increase. Now, let me tell you, people are having to do deals, discuss in rackets on how to obtain this same dollar at the I&E window at some rate above 500, showing you that the 416 is still an ostrich approach to say that our currency is strong, to avoid devaluing our GDP value and all of that, and we keep playing the ostrich. Meanwhile, people are now desperately getting this dollar at 5-something at the same official window. Now, assuming it's even 500, this same dollar, you get it at 500, and you can sell at 700 in the parallel market rate, businesses will be more than tempted to arbitrage on that alone. Now, let me say it here again, and I hope the central bank is listening. Until and unless we confidently and proactively, close that gap reasonably, below 10% margin.
Below 10%,
Margin.
reasonable.
The gap between the government rate, there shouldn't even be a margin. But I'm just saying, because it's a tough situation we're facing,
Right.
until we close that gap between the official rate and the private market rate to less than 10 naira, difference, if I thought there must be a difference, we cannot solve this problem.
Right.
It's just an economic,
right.
human behavior, economic studies about human behavior as they try to allocate resources. So once you have created a room for bad behavior, the consequences must follow. The central bank over the past years, right from the previous central bank governor, His Excellency, His Royal Majesty, up till now our good friend Emefiele, have continued to do the same thing, and we're not seeing any different result, and we keep doing that same thing.
Well, the emerging economies are struggling right now, with currencies. We're seeing the same thing happen with Zimbabwe.
That is the excuse we are giving, that the whole economy, of course, we expect a global recession next year. So it's not well with any economy around the world.
So
but you must look at the economy specifically.
Yes, countries must do something. Yeah.
Risk management is specific, particularly operational risk. Every operational risk is said to be an idiosyncratic risk, specific to every organization. Nigeria must, beyond looking at the general market-driven risks that all economies face, what are the unique risks that we face in Nigeria that will enable us to solve our problems and not go into insolvency the way we're going? Because this is causing us big issues. We can't borrow right now, and if we're able to issue any bond to borrow, those bonds will be deeply discounted, and the value we get for every issue is much less. And that affects our sustainability. You can imagine the amount of things we've done in terms of infrastructure. But when you look at the cost of that, the cost in the future of this country is not sustainable. Sustainability means that whatever you do today to grow your economy must not stop your future growth.
So much to unpack there, Mr. Ojimleze, but we've run out of time. But at the end of the day,
a short period, but we'll keep talking
at
about
the end of the
issues.
day, we emerging economies have to do a lot, at this time. Thank you so much, Mr. Ojimleze, CEO of Flame Academy.
Always my pleasure.
Always great having you. All right, after the break, we'll take a look at Nigeria's insurance industry in the face of rising inflation. That's our next conversation. Do stay with us. This is Business Morning. Welcome back now to our next conversation. Well, with inflation and the rise and so much uncertainty with major economies, insurance industry and premiums are being impacted by all of this. For an assessment now of how the insurance industry has performed in Nigeria in the first half, we have Rashidat Adebisi, Chief Client Officer, Aximansa, join us right here in the studio. Great to have you.
Good morning, ladies.
Good morning. And
Great to be here.
First of all, congratulations and order for your recognition as a top 50 women in insurance in Africa.
Yeah, thank you.
How does that
Thanks.
feel?
I mean, it's amazing, challenging as well, because it says that you need to do more. But for me, it was such an interesting recognition, being recognized among some Amazons in the insurance industry who were also recognized at the same time. And I haven't spent as much time. So it's definitely very exciting for me.
Quite interesting. And how can we do more to get more female, leaders, like you out there?
Yeah, I mean, it's very simple, right? There lots of researches have been done. Women, when they come in the financial industry at entry level, about the same time, we have equal number of men and women. But along the way, many women drop off. And why? Some of them are facing different challenges. And the organizations haven't created the ecosystem that can support them during those tough periods. Because we find out that when they do make it through, they're more loyal, they're high-performing, and they're able to make significant impact. So organizations like mine, for example, have introduced things like crash facilities before COVID, especially we had to shut them down during the sanitary situation. But having the crash on ground, helping them through those tough periods, having the right sort of maternity. When I first took my maternity in 2005, those sort of areas, you could only get 90 days in Nigeria, and people felt you've already gone away on leave. So you didn't even need to rest and take an annual leave. But we've changed many of those things in recent time, right? Where you can have your maternity leave, have annual leave to take some time off. And we also give extra time to women to be able to settle in if they're still having challenges. We have a hybrid work system. So things like this could be very supportive. We also find out that some women are not very confident until they have 100% of the skills to apply for a role. But some guys can apply a 40% competency. So creating that environment that encourages them, just giving them that nudge, puts them in that space, and they can do everything that they want to do. So for me, I would say very important not to judge us just by what we look like.
Right.
Give us an opportunity to engage, to consider opportunities that come up even outside town, which many companies also, oh, she's a woman, she won't go there. Judge us by the content of our character, what we know, what we can do, not by what we look like.
Right.
This will make a
Women
difference.
doing incredible things,
Yes.
all around, and we can,
Sure.
see that. But, looking at the first half of 2022, it's been tough, for major economies. We've seen inflation. That one has continued to stay with us. It's become persistent. At this point, we're seeing central bankers, raising rates. How would you assess, the insurance industry, so far?
I mean, the first half of the year, it's very challenging times, as you've mentioned, Ladi, for Nigeria, for the whole world. Things are very complex. When you think about the economy, you think about oil price, you didn't touch on that,
the oil
and the
price.
impact on,
Right.
even doing business, right? Many of us in our homes could put up the gen for a longer period.
Diesel.
We can close
Right.
our offices earlier, but health facilities have to keep running. Things have to just happen. So how do we find that balance? So it's definitely been challenging from an economic standpoint. But nevertheless, we've seen improvements in the insurance industry. We're seeing more influx of technology coming in to help improve processes so we can optimize costs. For a company like ours in AXA Mansard, we're trying to reduce those costs so that we can pass on the benefits to clients and they can have better pricing for their solutions, for their healthcare. So things along this way would make a big difference. Insurance penetration is still so low. So many people are not covered. I remind everyone that we're actually the safety net of people around us because we don't have any government social security. When something goes wrong, they call you. They call us and say, look, your wife had a baby, and I wonder which wife, and you're not married. They're just trying to send a message to you here. So why can't we ensure that we put the right support in, by the right policy, because the insurance company is positioned to do that. That's what we are here for. We can provide that right level of support. So the first half of the year, things are growing. We're seeing more companies coming in, trying to see how they can do things differently. Tech, taking some level of position, expensive because it's also foreign currency based. We need a lot of our engineers are leaving the country and emigrating, if you call it the Jackpot community.
Right.
But we still need so much more here. And there are hundreds of millions of Nigerians who are still vulnerable. So there are still things to do, but the industry is very focused. If you think about how we supported the country after the EndSARS, about 11 billion naira in premium in claims were paid by the Nigerian insurance industry. So people are not seeing enough how we're impacting. So there's so much more work for us to do to create more awareness, to engage, and to ensure that we start to help to prevent people from falling back to where they came from. If you worked so hard to gather assets all your life, and then because of one unfortunate, unexpected event, everything goes, that means you're totally lost and all your dreams are gone. So the insurance industry and our kind of company can help you make a difference in that regard. And so we continue to see this growing as we come into the second half of the year. Right now, I think the last point for me is when you think about inflation and the cost of replacing things,
right,
it's very expensive. So this is the time for you to have insurance, because if you didn't plan to lose your car...
How's that impacting premiums?
Oh, I mean, on a premium perspective, right, it's a bit mixed, because right now in Nigeria, people still believe that God is their insurance. Right. But let me give you an example. If you bought a car at $10,000, just barely 5 years ago, and dollar was maybe around 250, just assuming. So that means it cost you 2.5 million naira. That same car now, if at same $10,000, will cost you about 7 million naira. So if you even depreciate that 7 million naira over that 5 years, your car is worth at least 3.5 million naira. But people will still want to insure their car at 2.5 million naira because that's what I paid for it. But that does not replace the value of your car. So how is it impacting insurance premiums is that we are advising our clients to revise their values up to appropriate replacement values. We're making sure that they're paying their premiums.
And incomes are squeezed too.
Yeah, so we're creating, instrumental payments, for example, come like AXA Mansard, who are creating solutions, working with partners to make sure you can pay monthly, quarterly. We're working with corporate organizations to make it better for them, more comfortable, and working within their budgets. But sometimes what you need is perhaps might be a bit expensive, but you could start from the base, just from the step, to say, look, even if what is most important for me is health, let me make sure that I can always go to the doctor without thinking I need to go and find a big bag of money from somewhere, at night, in the morning. Even if you're not at home and your kids, something happens unexpectedly, you want to make sure that someone can take them to the right place, they can get the right intervention, they can be cured, and then they are ready and back to life again. And this is what we can do, and this is what the industry is able to do. So premiums are growing a little bit, but not as much as it could, because we still have a lot of underinsurance happening, because we're not reviewing our values up quickly enough.
And you mentioned, health insurance there,
Yes.
and, we've still had that issue where, some clients say, oh, they take their insurance, to the hospitals and they don't really take them as priority. They would rather take, those paying cash, at that point. How's that being
That was
addressed?
many more years ago,
Right.
when a lot of hospitals didn't appreciate the benefit of HMOs. HMOs create significant cash flows to hospitals. And why? We bring in a lot of clients that ordinarily they might not get. And we give them an assurance of payment. Because sometimes people can bring in a patient and they don't have money and you say, go and find money. Go and find money. And they don't treat them. And then something terrible happens. And when you think about the doctors take an oath to make sure that they do no harm.
Yeah.
So that means that sometimes they have to treat people and they never get paid for it. So the HMO will ensure you get paid. So there's no issue of liquidity. You can even plan and invest and take a facility from a bank because you can show that I have businesses coming from this HMO. So we see more serious hospitals coming up, working with us, partnering with us to make sure that we can, pay them and can get access to our clients. And we're using that to create the right solutions for our clients. But it also depends on your affordability index. Right now, insurance, we compete with food and airtime.
Right.
So this is the reality. You have to eat first. But what if you're not healthy? You won't even be able to eat or find a way to create money and be able to feed your family.
But you're also, putting out ways that, affordability.
Oh, yes,
you know.
yes. We have some amazing, like in AXA Mansard, for example, we have a few initiatives where we call on the emerging customer side. This is to the middle, low income space, just to put your first step into healthcare. We have a malaria insurance policy, for example, that costs as low as 500 naira a month. And we also have policies that can help you at least get access to speak to a doctor, telemedicine. Which is quite affordable. You can go to the pharmacy, you can get the right drugs, so they don't even sell you fake drugs. So those sort of things are available already to just set you in there to see how we can help. But you can actually get a very decent policy for 5,000 naira a month. And people go and eat a meal in a restaurant and they spend more than 5,000 naira a month. So imagine 5,000 naira to take care of yourself, to make sure that not just if you're ill, you can actually do preventive measures as well. Take a health check your numbers, know where you are. Because many things can actually be avoided if you've actually, done some level of test ahead, you know that you have high blood pressure, and you're taking the right drugs, then you can live a fulfilling, fantastic life.
And recently, I read about an issue with insurance companies that were giving out motor business insurance. Most of the inflation really impacted, that sector. Lord, tell us about that.
So if you're referring to the point around, is that third-party insurance
Exactly.
policies?
There were many claims.
The reality is this, third-party insurance policy has 5,000 naira for the last 17 years. I've known, at least from my own view, and I don't think that's the right price anyway, but it covers a limited amount of risk. But at least it makes sure that it's a third-party liability. So if you have a third-party policy as an individual, it doesn't cover any damage to your vehicle. It covers you damage to other people's vehicle, maybe up to 1 million or 2 million in property damage. So those sort of policies are in place. But what we found out that some people aren't selling them even at the right price. Some people are buying, what they call police let me go, which means it's just somebody collecting a very small amount of money from you,
Right.
and there's really no cover behind it. So you can buy fantastic third-party policy from our website, from salespeople from our company, even the NIA, the Nigerian Insurance Association. They have a platform where you can access at least real registered, original, well-vetted companies. So you don't need to necessarily buy it from the wrong place on the roadside. So some of those guys were buying policies on the roadside for companies that don't exist. So when something happens, there's no claim to be paid. So this is sort of the situation that we've seen happen in the market
interesting.
before. Yeah.
Well, but these are quite interesting times.
Sure.
Central bankers tightening rates. We're seeing emerging economies, their currencies, struggling at this time. We're seeing what's happening, with the naira inflation. But do you have tailored policies for times like these?
Oh, yes. The time when you need an insurer most is when things are even most uncertain because you're not really sure and you want to plan. If you have savings in the bank and an unexpected event happens and you use the money, then you don't have it anymore. But yeah, if you have an insurance policy, it addresses that issue and you still have lots of your money still left over. So people don't see this. So when you come to us, AXA Mansard, we're a very unique and well-placed, full-scale non-banking financial institution. So when you start from a mental and physical wellness side, from our health insurance, we're able to help our clients in this space. And why? If you're not physically and mentally well, you can't pursue your life's ambition, you can't do anything. So we have life insurance, we have health insurance products that helps you as an individual, as a corporate organization. We also have interesting policies for SMEs that is more flexible for them. because, they're trying to manage their cash flows, and we're very flexible. We can work with them in that regard. When you come to being healthy and you're now making money and you're acquiring assets, then you have a car, you have a home. We have our, general insurance, our P&C products that help you protect the car. Like we talked about, your car, 2.5, 3.5. Something happens, it means you need to go and look for 7 million to buy that car in the same state you bought it 5 years ago. At least you won't start from ground zero. And if you've actually raised the price of your insurance policy, your replacement value up to the right level, then you probably just find a little amount, add to it. We want to make sure you're back to where you were before and not back to where you were maybe 10 years ago.
And I'm sure you would have something for presenters,
But
like,
I think I've already asked you already.
Right.
Beyond compulsory insurances, I think there are life policies for yourself personally, even if you don't have kids yet. If you do have, there are also education policies to plan. One thing we don't do so well in this country is plan.
Yeah.
I don't think we've been told, work hard, you get money and you pay for your bills. But in many companies, many countries, I've seen that just learning that discipline of putting something away for a future amount that is almost known. Of course, we can adjust it for inflation and devaluation, means that you have some money to pay for your child's education in the future when that time comes. And then, of course, lastly, when you think about group life policies, we're very supportive. And on the asset management side, which we have, we're able to tailor, fantastic. We have one of the best money market funds in Nigeria, so please check it out.
I'll
you
check
can
it
also
out,
buy it on the
definitely.
website, monitor it. We have solutions that can help our clients in that respect. We also offer telemedicine. So right now, if you want to just take a quick break and speak to a doctor, you could call a doctor, have a chat without having to go and drive, go to the hospital, and you can actually have your medicine or any drugs prescribed to you, delivered to you wherever you are as well with some of our partners, or pick it up at the nearest pharmacy near you.
Quite
so these are really exciting things
quite a
we
lot
have.
you guys have. But looking
Sure.
at the industry now, what are you seeing going forward?
I mean, going forward, everyone can see the opportunity. We have the new health bill that's been passed. Even in the general and life insurance space, we see that people are really getting more aware. We're creating lots of education.
Right.
We're working with the government because every time you have a fire, I usually give this example. If in California, you see 100 billion insurance claims being paid, but when you come to Nigeria, you hear the government has contributed money.
Right.
That's what we tend to hear all the time. So insurance companies can be that bridge. The government doesn't have funds to give everyone.
Right.
So if you've already insured, it means that we can actually help. So the industry is doing a lot. We're strengthening. Capital is very important. So when you want to pick an insurance company, you want to make sure they have the right capitalization, they have the right strength. Don't pick them just because they're your friend alone.
Exactly.
This is very important.
Well, so much to pack there. It's an industry that's, you guys are doing a lot, for that industry, and it's quite interesting, and it's actually great, having you give us most of that insight at this time.
Sure.
Thank you so much. That was Rashidat Adebisi, Chief Client Officer, AXA Mansard. It was great having you.
All right. Take care.
All right, now we'll take a moment. Do stay with us. This is Business Morning. Welcome back to watching Business Morning. Let's head on to the markets now. We have Ini standing by right there. Ini, it's been a rough week.
Been a rough red week, laddie. Been a rough red week, at least for the equities. I don't know for any other markets, but I think even for the fixed income market, for yesterday, the all-share index was down more than 1%. There you go. And then we lost that 27 trillion naira equity cap there. Deals wasn't agreeing, but I tell you, there's a lot of sell pressure. Just that's what makes up this deal. As we see volume and value reduced yesterday. And I think the heartbreaking one is that we lost that 50,000 level there. That's how come the market was down more than 1%. But we have Abdurrashid Momo, who has been following a pattern, that he digged out from some years ago. He's going to tell us where we're going to next. Mr. Momo, good morning.
Good morning. Can you hear me?
I can hear you. I can
morning,
hear you.
Can you hear me?
Yes, I can hear you. So does this drop by over 1%? Does it fit into that pattern you've been talking about?
Yes, it's actually by the cliff. It's there, and it calls for a great concern. Honestly, what happens during this period is when we call it blood on the street. Everybody sells no matter what the price. Market is any share they just sell down across the board. But at times when people will realize, at times when we'll say that the market is on sales. Sales means that discount. So for now, because the market is down and everybody seems to be selling at will, but that doesn't mean that some support levels have not been met. If you see for today now, stocks like Zenith, UBA, most of the banks or the stocks that actually fell yesterday have actually rallied for today. The only time we'll actually know the pulse of the market will be towards the end, because it's towards the end of the market we realize the damage that has been done for the past 3 days now. It's towards the end of the market you see sellers coming in, and again the good thing that it's actually part backdrop with volume. It shows that some people are still buying within these levels as the market drops. My pattern have always been that about the 50,000 points, if the market drops below that level, then there might be issue. I'm still optimistic that we are actually by the cliff, and I feel that the bulls might just still have a final fight back. But as I said, in short and medium term, the market is still bearish. We don't have to fight the trend. I always tell people never catch a falling knife; it will hurt you. But I know that people selling and people buying, the people buying now will be the ones that will smile at the end of the day.
Okay, so it sounds like it's a good buying time from your perspective, Mr. Momo.
Yeah, for investors, it's a good deal because
Okay.
let me give you a scenario. From the period that the market crashed in 2008 till date, if you look at some of the banking stocks, I always use banks as an example because I always tell people always follow the smart money. If you look at people that own, like I'm talking about the Jimovias, the Elumelus, or the Dangotes, since they are the largest holders of these shares, they are since 2008. Despite the fact that the market crashed then to date, the dividend has always been increasing. So you can imagine dividends have never come down since the period from that time till date. The only thing we've seen for the past 2 years is that dividends have been stable, but it has not gone down from that time till date. And I don't see any change that's going to happen this same year. Like when the Q1, the interim dividend starts coming in, I don't think there's going to be any drop. You know, and I feel basically when people buy stocks at a lower price, you get higher returns on investment. So
Obviously,
as I told people, there are two players in the market, the investor and the traders. The traders are not finding it funny at all because the market is really going down against them.
really
But
good.
the
As you said, the
investor, the
street.
market is on sale.
Yeah, as you said, the street is all red at this time. Abdurrashid Momo, thank you so much, Head of Capital Markets. Thank you for sharing your perspective, and we'll still follow that pattern and look for the bull somewhere in there. We hope it will come out real soon. Enjoy your weekend.
Thank you. Yeah, you too. Have a nice day.
You too. So, Ladi, the street is red.
Yeah.
I hope it's not like
I
that
guess
for
it
the
depends
crypto.
on what angle you're looking at it. It's either you see blood on the streets or you see cheap stocks at this point.
Like cheap Russian oil.
Exactly. All right, Ni, thank you so much. All right, let's quickly head on now to London. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So the world's largest economy is contracted for a second consecutive quarter, although the downturn is yet to be officially termed, a recession. How's this being digested over there?
Good morning, Ladi. In London, the FTSE All-Share is actually in positive territory. I think this is down in part due to a slew of positive corporate trading updates that have been trickling in all week and especially today. But you're right, the US economy did post yesterday its second consecutive quarterly contraction, which in any other kind of G7 nation would be a technical recession. But the US, they have a lot of other contributing factors to it. But it is pretty worrying. It comes at a time where lots of economists are saying that the post-pandemic recovery in the world's largest economy is over. We know that inflation over there is running at 9.1%, a 40-year high. Jerome Powell, the rest of the Federal Reserve, have really been trying to abate this inflation by rising interest rates. But unfortunately, some have said that this is what is leading to a slowdown in economy. You make borrowing costs higher. People don't spend, which is what you want, but you don't want them to spend so much that you start curbing the economic recovery, which is looks like what's happened. But overnight, Wall Street was higher, and the FTSE led from that.
At the end of the day, everybody's still trying to battle inflation at this point. All right, Juliana, thank you so much. We'll get more updates from you at 1:30.
Thank you.
All right, now let's take a look at what's happening in the crypto space. There we see it's fear right now in the market. No more extreme fears at 39 points, showing that traders are getting more excited in the market right now. Could be heading towards greed. You know, at this moment, look at the market cap there, $1.10 trillion. It's up 4.17%. We see Bitcoin there flying high, $24,240, up 0.87%. Volume trading in Bitcoin, $39.11 billion. We see Ethereum there almost getting towards $2,000, $1,738. We're seeing it's mostly green, and the market pumps all over the crypto market at this point. Let's talk to Olumide Adesina now, financial market analyst. Hello, Olumide.
Hello, Ladi. Very green Friday.
Yeah, a little too green at this point. It seems the bulls are back in this market.
Yeah, the bulls woke up a lot of digital asset investors. In fact, if you look at the market liquidation, a lot of short sellers got liquidated at over 90,000, having $400 million worth of positions going into thin air because many people expected that the fact that the United States GDP report technically shows a recession in play will have investors going to the safe haven currency, but it was otherwise. And that really triggered many of these altcoins, particularly Ethereum, reaching 1,700 levels. This was the last time we saw that in early June. But having said this, Ladi, concerns still remain. If you look at the results coming from Apple, Google, Meta, and most recently Apple, it tells you that there's deceleration of economic activities. But how does that reflect in the crypto market is yet to be seen. But right now, the market is showing a very green day.
Yeah, quite a green day. But do you expect this to actually continue to next week? Because I've seen this happen before. You know, the U.S. Fed raised rates. I saw the markets getting all excited. But going forward, a week later, all the markets started going down again.
Rally, I want to bet against this rally, but looking at the long term and the fact that we still have growing uncertainty and the fact that the dollar just seems to be a bit asleep, it's very unlikely for us to see Bitcoin breaking above $25,000. But if we look at the moving average, I'm looking at the $27,000 for Bitcoin. Any breakup above that in long term, then we can say it's safe that Bitcoin might really stand the test of time. But right now, the price just seems to suggest that it's facing strong resistance around the 24,000 level. And that pretty much tells you that it's pretty much unlikely for us to see Bitcoin closing very high in Q2.
And talking about the U.S. dollar, we know how that impacts, other currencies. Do you think it's peaked at this point?
Not at all. Not at all, because you need to understand the sentiment helping the U.S. dollar. While we saw assets rallying high, it was because many investors expected the U.S. Fed to be more hawkish, but rather than they were moderate. So we saw sell-offs, and that pushed a lot of risky assets on. But having said, on the long term, we're seeing institutional investors, especially the conservative ones, buying U.S. securities, and dollar inflows remains high, particularly in emerging markets. You could see in Nigeria a lot of people run into crypto coins, buy stable coins because they want to get into U.S. denominated assets, and that's pretty much playing across many markets. So, with recession fears in play, it's very wrong to bet against a dollar right now.
Right. Just follow the trend at this point. Thank you so much, Olumide Adesina, financial market analyst. Always great having your perspective.
Thank you.
All right, now let's take a look at the top 5 gainers there. We're seeing a fat gainers list this morning with OP there up 52.99%. We see Ethereum Classic on that count at $44. That's up 36.16%. And we see RVN also inching up there about 29.33%, and Bitcoin Gold, one of the Bitcoin forks on that top list, top gainers counter there, is up 20.33%. So flip over to the top five losers list. We see it's quite lean on that counter, and we're seeing mostly stable coins, showing that traders are going into the market now full on, try and make some profit, most of those coins. All right, that's it for the markets, and that's a wrap on the program. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.